Good morning and welcome to this week's Jump Recruitment discussion. This week we're going to talk about strategy for growth in a declining recruitment market. But first, some breaking news. Next week we launch our new podcast series. So welcome to the Recruitment Leaders Unlocked, which is obviously a podcast series by Jump. We're looking to create a podcast series for recruitment leaders, obviously by recruitment leaders. I'm going to break the podcast down to four different areas. That is growth, leadership, culture, tech, and AI. So I'd like to think that as a group, we've made up of lots of experienced leaders in Jump, people from Adidaco, from Computer People, Office Angels, Spring, Manpower, Engage, Robert Half, Outsource UK. So you can say we've built and scaled our own agencies. So we know quite a lot about this. But what we want to do is introduce new people into this. So the thought of the podcast, we're going to interview recruitment leaders from other businesses of all sizes, ranging from 1 to 5 heads, scaling to 6 to 25, from 26 heads to 50 heads to 50 heads plus. We've got some absolute brilliant guests on in the first series. The first series, we're going to talk about growth. So it's obviously, we're going to give you a full spectrum view of what it takes to build, grow, and scale a recruitment business. We'll uncover the common threads that unite all recruitment agencies, regardless of size, and the unique challenges leaders face when it comes to growth. So the first one is Martin is going to be interviewing Jordan Maitland, who was a co-founder of a company called Proven. That's a contract recruitment business in the tech space. High impact workforce solutions is what they offer, and they focus on day-to-day recruitment solutions. So it's going to be a really interesting conversation with that. And then they come every fortnight, interspersed with the webinars as usual. So it's going to be really interesting to see what people have to say on the things that we're going to ask them. But today I'm joined by Dave, Heather, PJ. Martin's on client site. Dave's making an early dart at 11 o'clock, and I'm out in Australia. So it's
international.
It's I'm going to say it's 10 o'clock for me in the night and 11 o'clock for you guys in the morning. So I'm a bit jet lagged. So if I do talk a bit twaddle or more twaddle than normal, then please let it go. We'll see from there. So let's kick in the first question then. So what sales strategies are currently working? So suppose the question is, how do you win new clients when budgets are tight?
Do you want to start that one, Dave?
Yeah, I mean, when budgets are tight, it's interesting how because there's a lot of data available. There's a lot of free stuff that is available to us all, and one of the ways of winning with your clients is to provide them with the data that you've got that they perhaps haven't got. So you don't have to spend a lot of money on trying to secure or win new clients. You can grow your business by giving your clients the data that you've got, trends in the market, salary surveys, updates on AI. You think of all the things you mentioned there in the podcast, How those 4 things, your clients would be interested in knowing all about those things, about what's going on in their market. And if you can get your consultants, your team leaders, your managers to be educating your clients, that's free. That's data intelligence, that's marketing, that's sales. And the more people you reach, the more chance you've got of securing business. That's one thought.
There you go. I mean, I'll just a point. It's a great question, Howard. You talk about budgets are tight, and I think that's true. There's no question that money is tight. Companies are understandably looking at their costs. I think this comes down to something really important, that you have to separate the costs away from the value proposition that your business provides. So I think this comes down to putting yourself into a situation, a position with clients, existing and potentially new clients, where what you're offering, and in our case, as Dave said, it can be information, but it's clearly also about specialist candidates. If you are in the position where you're looking to provide that very specialist service, whether it's the provision of information or outstanding candidates, then I think budgets are a separate issue. If you're giving value and the clients understand the value you provide in a holistic sense, then I think, in a sense, money can be found because they recognize that investing in your service and in the people that you provide is money well spent. If they fail to understand the value you provide as an organization, that you're just another agency, then I think money starts to become a conversation. Why should we pay you this? Why should we pay you more than somebody else? Cut your costs and the rest of it. I think it's about providing yourself with that standout positioning, that platform that enables you to be seen as the expert in your particular sector.
You're on mute, Heather.
Rookie error. Rookie error. You can tell I haven't been on for a few weeks, can't you? To add to that, from a slightly different perspective, this is about getting your recruitment consultants to hold their nerve. The real temptation here is to start a bit of a scattergun approach here, and it's difficult to find those vacancies that clients want you to fill, and so the temptation is to just fill anything that you can get your hands on, which is outside of your specialism, when in fact you need to be even more focused on your specialism, your special offer to your clients, your exceptionalism. And so actually holding your nerve and almost becoming narrower is how we make ourselves stand out in a really crowded and challenging market.
Is that a word, exceptionalism?
Absolutely, it's a word.
Is it? I mean, I come from Hackney. What do I know about good English?
It's a great word.
Okay, I'll take that. Okay, fair enough.
So I think the comment is very simple on what strategies you're currently working. And I think the strategies that are working is a mixture of old and new strategies. And I think you've got to start to do that digital gathering of data, connecting to your people via digital processes, scraping their data, using email campaigns, but then following up with definite call and meeting strategies. And I think what generally happens, that what's working now is people who are doing genuine, consistent business development, not just the odd weeks here and there, but daily. Every single day, there are people doing business development. And as Heather said there, I think people get a little bit desperate. And if you think about the UK fill rate, it's 19% is the UK fill rate. And therefore, we've got to start to think, if you stopped working even just half those roles that you don't fill and put that time into developing the clients that you've already got and doing new business development, because notice I said business development, not new business development, because I think there's two different strategies there as well, then what you start to see is people have a better opportunity chance. So I think you've got to start to use the data to show where you should be trying to fill jobs and start to look at the clients that you know aren't going to fill, you haven't got a chance of filling, because we get desperate. And I think what we start to do is we start to play the KPI game. And our consultants go, well, I've pulled 3 jobs this week. I've pulled whatever KPI number it is, but the chance of filling those 3 jobs are probably 0. So we've got to start to think, we've got to go back to look at what we're good at. And that's a mixture of old and new. Get that digital footprint working, get your digital marketing moving, and then get your old call strategy and meeting strategy out there. And I think if you start to do that, you will start to see a difference. And if you haven't been doing that, that's why you're having inconsistent and poor results now. And I think this is the change that works from there. So if we move that on, then how can recruitments protect fees and margins when there's always someone that will drop their price?
It's been like that forever, hasn't it? I mean, I go back, as everybody jokes, many, many years in the industry, and even back into the 70s and 80s, it was always the case that agencies, and I'm using that kind of word in parenthesis, but agencies would drop their trousers at every opportunity, because that was their only tactic to retain or win business. It's always been that way. And I think, so when we talk about it in today's market, I don't think that's a different question to the same question I was looking at 30, 40, 50 years ago. You've got to be true to yourself. I think it's about making a decision about what price are you going to trade at. And I think it's about having the courage to walk away from some organizations, some employers that aren't prepared to pay a reasonable fee. But I think you've got to get ahead of this situation, because if it's the case that you are going in against other agencies and you are an unknown provider of staff to the client, then of course they're going to judge you as they judge others. You've got to be in a position where you've had the opportunity to talk to clients, to meet with them, to demonstrate what you can do, to provide evidence that the type of, or the quality of the service you provide, and the quality of the people that you are capable of attracting and providing to them is a step above perhaps your competitors. So the price for you is not quite the same issue as other recruitment businesses who are in the main invisible. They don't go and meet clients. They sit behind their screens. They're not providing the sort of brand image that they should be, or even their own personal brand image that they should be. So I think, to avoid the issue of being told you have to drop your price to be at the same level as everybody else is about being proactive, get in front of people before this question arises. And at the same time, I think it's about having self-belief to the point that if you genuinely think that what you're being asked to charge is way below anything you're prepared to accept, then walk away. Because I think that's the right thing to do. Find clients that do value the service that you provide.
I think the additional word there is, it's not find, it's create.
True.
Clients, right? So this is about moving your clients up the value chain so that you move from being a grudge purchase that is price dependent into being a trusted partner and deliverer of solutions. There's no quick fix to this. So you have to not compete on price. And that's, again, it's hold your nerve. It's a tough proposition, but it's just moving yourself up that value chain.
Yep.
So you move from being that transactional price-based decision to being a partner, a true consultant who's trusted and valued as part of the delivery team.
And I'd like to pick up on Heather's first answer with that 3-letter acronym, which is HYN, hold your nerve. I think that's a great summary for us to pass on to all of our staff, because at the moment, I think many recruiters should be thinking about putting their prices up.
Yes.
Because, guess what? Our prices are running our business is going to go up a couple of percent next month. We're all faced with additional costs. So we should be looking at ways we can increase the prices, because if, as Heather and Paul say, we're not selling on price, it becomes almost immaterial. Yeah, this is what you have to pay for the service that you get. One thing I would do, and I've always maintained that we should do this, is when we talk about margins, and I'll go back for a price conversation, we talk about 15%, 16%, 17%. Add a little bit more so your price can go up. You can have a 15.5% margin.
Yeah.
You can have a 19.37% margin. You can have a 20.06% margin. Yes, it's maybe a little bit more difficult to work out, but those little bit extra, particularly on contract, where you've got more flexibility, can help to maintain your price or just put your price up a little bit. But where you can, hold your nerve, and if you can sit together with your finance team, try to get the prices up.
I think when we talk about price and we talk about service, I think we tend to forget the simple word of quality. And I think it's sometimes having something that others don't. And it always reminds me of that old Jerry Rice quote, do today what others will not, so tomorrow you can do what they cannot. And I think that is, if you think about what a client wants now, and I think that's a very simple answer, they want good quality candidates. So if you're doing the same as every other recruitment agency, and when a client gives you a job, you go, let me go away and find candidates for you, let me advertise candidates, because you haven't got a database, which goes back to our early conversation, question 1, about not building around the clients that you know that you can fill jobs, or the type of clients that need those type of jobs, then we're always going to have that. So your product is the first thing that we should look at, then your service. And you can't really sell your product at the moment, unless your service at the moment, unless you've got a really good product that gets you through the door and keeps you getting you through the door. And that's your existing client base and your new client base. So I think we've got to start to focus on human collateral. What human collateral have I got that I can then start to take to my client and work with my client with? That means getting closer to our clients and understand what collateral they need all the way through the year, not waiting for them to tell you what collateral they need. Because if they're telling you what they need and they need it tomorrow, it's too late, because they've told probably 3 or 4 other agencies the same process. But if you know what they want, I mean, today's March, we're in March. If you know what they want in May and June, you can already start feeding that to them. And Dave's comment, that's a real great comment, Dave, because that took me back to my contract days when we were saying, right, okay, forget talk about margin, talk about money, okay, and then can you drop your candidate by £1 or so? Can you increase your client by £1 or so? So naturally, you're increasing your margin in the middle. Very simple. But to do that, you've got to have good human collateral to get you through the door and keep getting you through the door. Here's a really interesting question, and I've seen so many stats on this ranging from 600 to 7,000. I'm not too sure what it is, but we're going to look at that. With so many recruitment agencies at the moment going to the wall, what will separate the agencies that survive from the ones that fail?
I think we've kind of hinted at it, and we're working now in an incredibly fast-moving and changing environment. I mean, the rate of change in our industry, and I think, let's be clear, we serve industry, we serve the economy as an industry. So the level of change, the rapid development of our own industry sector is reflective in, I think, the behaviours and the actions of the people we serve. We have to be nimble. To answer your question, you have to be agile. Dave made a great point about the whole, and indeed you all have, about being proactive and getting in front of situations. And I think demonstrating agility, the ability to shift and move. The good news, I think, is that, and it's always been the case, that the vast majority of recruitment businesses in the UK are small organisations, micro businesses, SME recruitment businesses. You have the ability when you're small to shift and change quite quickly. And I think that ability to think ahead, to be proactive, to talk, as Dave was saying, to talk to clients about providing services that perhaps even a few years ago you wouldn't have dreamt of providing, to understand what it is clients want from you as a service deliverer, is the essence of survival. Doing what you've always done, to use that horrible old cliche, isn't going to get you the same results as you've had in the past. And I think it's very difficult. Let's be honest. I mean, we all become quite embedded in our behaviours and and the way we've always done things. There are many, many, many people in our industry that have done extremely well over the years for themselves and for their people by providing a certain type of service in a certain way. And well done. But I think the point here is that if you're going to survive, you have to constantly analyze what you do. You have to constantly ask yourself, is it working? Is it working as well as it used to? You have to constantly seek new methods and new services to delight your clients. And a failure to do that will result, as you put it, Howard, we don't want to be too catastrophic here, but it will diminish your positioning and potentially lead to you locking the door and walking away at some point.
Yeah, I'm going to just focus on something slightly different. The 3 things that I would focus on, if I was perhaps close to the end, as you say, we don't want to get too down. But 3 things: cash, DSO, debtor days, and alignment with your FD. If you're running a small business, you may not have an FD, you may be the MD and the FD. But I think you have got to be watertight with your finance people, whoever they are, whoever she or he is who's leading that. You've got to have a complete focus on cash, because businesses go bust because they run out of money. It's an obvious thing to say, but it's so obvious that sometimes we forget that. And I think if your business is suffering at the moment, they're the things to focus on. And obviously, you want to grow your way out of an issue. I absolutely accept that. You can't cut your way to growth, but you do have to remain resolutely focused on DSO, cash, and finance. And I say that particularly because so many recruitment businesses are run excellently by salespeople, not finance people. And that's a skill, that's a business development skill that we as people who run business focus on. So that would be my short answer to that.
Yeah, that was going to be cash was going to be mine. cash, and DSO. So, Howard.
I think I've got a slightly different sort of viewpoint of this. At the moment, I'm working with quite a number of micro businesses, all who have less than 6 months' experience in the marketplace, brand new recruitment agencies. And they're not having a problem finding new clients. In fact, they are smashing it out of the park. And there's a very simple reason for that, is that they believe that they're obscure because I keep telling them they're obscure. And therefore, they're going out and doing what all good recruitment agencies are doing, which is the core basics. They're doing them well. They're understanding what a good client looks like. They're understanding what a bad client looks like. And they're only working with the good clients. Now, there's lots of recruitment agencies on today. I've just had a look at the people who are on. There's some agencies here that have been 30, 40 years old. There are some agencies that are really brand new that I know we're not working with, who are not particularly performing as they should be or could be performing. And that's because they don't believe they're obscure. They believe that everyone in their marketplace knows them or knows who they are. When actually, that's an absolute fallacy. And I remember having this conversation, didn't we, guys, at the beginning of the year when we talked about we want to grow Jump this year. We looked at it and, we were saying we're really, really well known in the marketplace. And we suddenly said, oh, hang on a minute. We're working with 200 plus recruitment agencies. There's 35,000 recruitment agencies in the market. So we are eating our own medicine at the moment. We are obscure and we're trying to do the things to try and drive ourselves into other people's businesses and get people out there. So we've got to understand that we can't believe our own hype and keep thinking just because I've been around for a long time that everybody knows me. That is absolutely untrue. So if every recruitment leader thought that they were obscure and went back to doing the core basics when they started, understanding what a good client works with, only working those clients that will make the money, then they focus on what I would call the strategy to execution gap, and they would start to make money. I've got clients who are working in the education market, who are working against multinational recruitment agencies with 4 or 5 brands, who are winning clients from them hand over fist because their service, they've got product, they've got a good service, and they don't believe they're obscure. They go out there and actually try and demonstrate that they are obscure and keep working really hard to become a name in the marketplace rather than thinking I have a name in my marketplace, therefore people will come to me. So let's move the question then. So let's cut through the excuses then. So what are agencies getting completely wrong? And what do the winners know that the others don't?
There's a great question.
One of to answer this, one of the questions that we ask the recruitment leaders on our Recruitment Leaders Unlock podcast is, what one piece of advice would you give to other recruitment leaders? And we do that at the end of the podcast. And the one piece of advice that I've always held true that someone gave me as I was learning was, don't react, then you can't overreact. And it's stuck with me in so many situations, and it's true in this situation from a leadership point of view, where leadership suddenly turns into panic because the market's turned, we're not making as much money as we want to, we're not winning enough clients, all the negative things that happen day to day, and leadership changes. Whereas for me, your leadership needs to remain true. And if you're having a bad day, it's okay to show the team you're having a bad day in the context of, this is how it works here, because it's good for your culture to be that open. And also you'll get more buy-in from the staff that you need of accelerated performance or different performance from, because there's changes in the market, there's changes with the candidates. It's a difficult market for some at the moment. And it's great to hear that some of the smaller ones that you're working with are growing. We've got some that are growing really well, but not everybody is. So look at your leadership and try and hold on to the don't react, then you can't overreact.
I'm going to pick up a thing that I think is crucial to any organization that grows and maintains its development. And that, I think, comes down to something pretty straightforward, and that's about valuing the people that work in your organization and supporting them in a way that they feel they can't match elsewhere. And I think support also means not just in terms of providing them with the tools to do a great job and place them in an environment where they are given a voice, a chance to help the direction of the organization, to provide them with career opportunities, succession planning opportunities, and so forth. But it's also, in my mind, about supporting them outside of work, looking at policies. I'm sure Heather will pick this point up, that and development opportunities outside of work, even things around, even things, maternity, paternity policies and so forth, where people feel that they could work somewhere else, that it's easy enough to move on or even do their own thing, but frankly can't see the advantage. What they feel very strongly is that they're in the very best place they could be, working for great people in an environment that they value themselves. It's also about, we were talking about this, I've just finished a podcast with Paul Goodman of Goodman Masson, where it's about talking around not being greedy, allowing people to enjoy the development of the organization from a wealth perspective, giving them the chance to share in the development profits of the organization. I mean, I could go on for a very long time about this point. I think it's about people, if you really want longevity as an organization, if you really want to sustain growth, then I think it begins with who you bring in, how you treat them, how you look after them, how you coach and train them. And as I say, I could go on and on. But I think if you want to know what separates great businesses from average to poor businesses, it's going to be that focus on your own people that makes the difference.
And I think aligned to that, Paul, is that focus on the longer term, right? It's, there, and that links to what you're saying as well, Dave. There is sometimes a tendency to panic, right? And it's staying focused on your longer term objectives and not let having your short term behaviors damage your long term prospects. And this is sort of only slightly related, and I'm shoehorning it in here a bit, so you can tell me off later, Howard. It's a personal plea. I know 4 people who are part of have spent their careers as part of the recruitment industry who have, for no fault of their own, ended up job searching. And the experience they have of dealing with agencies as a candidate at the moment is so awful. And these are people who love the industry and are having, we really have not got to forget the long-term impact of our behaviour towards candidates at a time where we've got more candidates than we used to have. We're struggling with jobs and we focus on the bits that are harder to find, and we just forget the experience that candidates are having. And they remember, right? They remember, and that will have a long-term impact in your market.
Yeah, good point.
And I think
I've got to just disappear now. I love the answers. I'm not going because of the answers.
I didn't. So if you become a magician, he's about to disappear. There you go.
Yeah.
Have a good week, everybody.
Cheers,
you're
Dave.
cutting him in half. So I think the question to me was a very simple one, and I think you sort of touched on it a little bit there, Paul. I think those that don't have a plan and then stick to the execution of that plan, who are completely flip-flopping from one thing to another, tend never to get anywhere. And I think what winners do is they have a plan, they stick to that plan, and they execute the plan. And what they do is they constantly review that strategy, and they review the strategy to execution of that plan to ensure that that gap never happens. And that's usually lack of BD, lack of new business, lack of working poor quality roles, relying on clients that, a handful of clients rather than having a bucket full of clients. All of these things are excuses. Oh, my clients have stopped working with us. Oh, my clients have slowed down. Well, surely you should have known that months and months ago. Why haven't you been doing something about it? Surely you should have known that your reliance on a handful of clients will put your business at risk. But they tend not to look at that. And I think that's the fact that they haven't got a plan that looks at your short, medium, and long-term success. And that plan then is never executed. I mean, how many people, you Paul, you answer that as well as I can. How many times do we start to work with a new business that has been reasonably well established? We ask them what their business plan is and what their strategy is, and they haven't got one. Or they have one, and they bring it out, and there's about an inch of dust on top of it, and you have to wipe it off and go, yes, this was written this was written before Windows 95 came out. How did you manage that?
Clip art.
That's only yesterday, Howard.
For Paul, it's modern, and I think for people like that, we've got to start to think that, having a plan, sticking to that plan, and therefore staying in your lane and not jumping from one shiny thing to another, that causes the problem. Because if you start to think, if I'm jumping from one shiny thing to another, I've still got to spend an awful lot of time building that strategy again and having a better strategy. So I think cutting through the excuses is what they've got completely wrong is they haven't got a plan and they're not sticking to whatever plan they have. And that plan is never being reviewed to make sure the strategy and the execution will get to where they want to be.
Oh, another facet of hold your nerve.
Hold your nerve, exactly.
There you go. Here's going to be a really interesting question because I've heard this so many times. And I thought, I've got to push this in because everyone's talking about it and the market seems to be changing forever on this earth. Everyone keeps saying, build a contract or temp book. It's reoccurring revenue. But what's the real time, cost, and strategy behind making it work in this market? What are the hard truths about growing a temp and contract book that no one wants to admit?
Okay, well, I mean, maybe I could kick this off. I mean, as you know, my old business, Office Angels, we was providing, I think, on a weekly basis, around 9,000 temps a week. So I think I can speak with some reasonable confidence about to this question. The thing about developing a contract or temp desk is that you have to have a long-term vision because, frankly, in the first year or two, you're not going to make an awful lot of money. And I think it's true to say that with permanent biased businesses, they feel that's slightly daunting to take somebody on or people on and get them to start building. It's a slow process to develop contractor numbers, temp numbers. It's very rare, particularly for small recruitment businesses these days, to break into a large corporate and suddenly have volume opportunities. And frankly, given the margins that go alongside a lot of these corporate accounts, it's probably not a good idea to even think about doing that in the first instance. SME recruitment, SME business means that you're supplying one contractor or temp here and two there and so on. You need a broad client base. It takes time to develop that. It takes an awful lot of business development work, and you have to be very focused and concentrated on doing this. So this means that the investment of getting a desk or a division moving is a medium to long-term investment. You're probably not going to make any money in that particular space for the first 12 months or so. And even in the second year, it's a moderate level of profit. And I think for many perm businesses, they balk at that. They worry that, I can't afford to do that and so forth. To my mind, it's also around the due diligence that goes alongside providing temporary staff. There is an awful lot of paperwork to do, a lot of work around making sure people are compliant and so forth, which again, I think provokes a kind of defensive posture for a lot of recruitment companies. The prospect of doing those things is also daunting. So it requires, I think, a long-term vision, as you said, Howard. I'm going to obviously stop in a sec, but I do think this point is very valid. We know that multipliers, when you sell your business for businesses that have a good blend of both temporary, if I can use that word, and perm, are much higher than perm-only businesses. You're looking at multipliers of ×5, ×7 for well-blended businesses versus very low multipliers for perm-only business, particularly for the point you make about recurrent or revenue. But to get there requires investment in time and in terms of money and funds before you get to a point where you start to get that blend that I think makes you a healthy business.
Yeah, and I think that's a great explanation strategically, Paul. One of the little bits of detail that I think sometimes gets missed when we make a decision as a leader of a business to do that is that we forget to explain to the people in our team that we're asking to do it how important some of the detail is. So the detail of the contracts that you sign, the detail of the margins, the detail of the payment terms, for example. We had to do so much work in the past to just make sure they would blithely agree to go from 30 days to 90 days without understanding the impact in a temp business of we're paying the temps up front and we're not collecting the money from the client for 90 days. That turns it from a profitable business into a loss-making business.
Yes.
And sometimes we forget that in the detail of our ambition. So if you're going to do this, one of the costs is the cost of financing it,
The
cash
funding,
flow.
yeah.
Yeah, cash flow, impact on your DSO. So make sure you involve your finance director or your accountant, whoever helps you with your financial planning. Look at the detail behind the contract terms you're going to agree, so it will make a massive difference to whether you make money or lose money.
I'm going to sort of jump onto Paul's bandwagon here. You know, again, at Computer People, we were running 4,000 plus IT contractors.
Nothing.
So
we had 8,000. There you go.
I'm not going to talk average margins then to you, Paul. So
boys, put the testosterone away.
Yeah, indeed. So, but what Paul's saying there is absolutely right. And if you're going to start a temp business today and think that that's what's going to pull you out of the recession, then you're going to be sorely mistaken, because it's a temp and contract is a slow drip of revenue coming through.
Yeah.
And it's that slow drip that will eventually kill you, especially if you've got long payment terms. I've worked with the REC over the last 3 or 4 years, working with new recruitment agencies who are coming into the recruitment industry without recruitment experience. And you'd be absolutely bewildered about people's expectations of coming into the recruitment marketplace and thinking they could just grow a temp book and it's going to make them revenue straight away. So
I've heard that expectation in people with experience in recruitment, never mind newbies.
So the one thing that people don't tell you is this simple point. You know, if you've got an average perm fee of £5,000, that's £5,000 that comes in every time you invoice £5,000. If you've got a perm fee, a temp fee or a contract fee of £5,000, that fee might take 6 to 12 months to materialize into your bank. And therefore, what I'd be looking at is, yes, long-term strategy would be to build a temp or contract book in my business, because that will pay for my business. And as Paul says, the further down the line, you get a bigger multiplier. However, only 1% of businesses in the recruitment market make a trade sale. So we've got this big fictional viewpoint in our head that if we grow this great thing, it will be worth a lot of money, when only 1% of trade sales actually happen in the recruitment marketplace. And that's what people aren't understanding. So to get yourself into a position where people want to come and buy your business, it has to be financially stable in the first place. And therefore, to do that and coming out of a recession, I wouldn't be thinking of building a contract and temp book just to bring myself out of recession. What will bring me out of recession is a long-term strategy to build that temp line and perm line and contract line and drip it in, but to bolster it constantly with a really hard-nailed permanent recruitment strategy. How many people do I see that have got a massive temp book, they're having a big problem, and you suddenly walk in and say, hang on, how are you doing on perm? Oh, we're only doing this. Well, there's your big gap straight away. There's your low-hanging fruit straight away that will land instant cash into the bank. If you're working hard-line DSO days, then that will start to really turn the business around really quickly. And that's what people don't tell you. They have this glorified view of grow a temp and contract book because it's going to be worth a lot of money. It's a hard marketplace. We've got to work a hard marketplace. We know bad clients drain your time and profit. So how do you identify, replace, and upgrade clients based for long-term success? Or is it time to fire some of our clients?
Well, that's a really big question. We could spend 45 minutes answering that question alone, I think. I think it almost comes back to what we started talking about at the beginning of this particular webinar, which is to understand the value you offer to your customers and your value proposition, your worth in your ecosystem. And if you feel, and it's, as I say, it takes a long time to answer this, we don't have the time, but do you fire clients, to use your phrase, Howard? It's a constant examination. It's not something you do once a year or every 6 months. It's constantly reviewing your client base. It's looking at, as Heather was talking about, the margin you have with those organizations, their attitude towards you, your relationship with them, their openness to developing a relationship with you, the time spent on trying to help them or not helping them. There's a million different factors you have to consider here. I know people are always and understandably nervous to fire clients. We talk about the Boston Matrix, and we talk about in that bottom left-hand quadrant, the dogs, as it's called. At what point do you say enough's enough? Well, I mean, it's a question that should be decided between a group of people. It should never be one person's view. It may be back to Heather's point about, are we being paid on time? We may be doing business with them, but what's the debtor days with this organization? It could be any number of different factors. But it's healthy to be daily and weekly reviewing your client base, looking at the factors, talking to the people on the front line, your people, or in your case, if you're still at a desk, your relationship with your clients and the results that you're getting versus the time spent and so forth. No one wants to fire a client. That's the last thing any of us want to do. But ultimately, if you're going nowhere and you are literally banging your head against a brick wall, or you feel that there's limited respect towards you from that organization and they're not paying your bills, then I'm afraid inevitably there is a point at which you're going to have to make that decision. And to the point, can you find other business? Well, that's what we've been talking about. There's always other business to be found. It's not easy. And again, it's not something you do on an irregular basis. It's a daily occurrence. Of course, client base shift and change constantly. Take a look at your own client bases from 3 years, 5 years ago. I'll guarantee your current client base is very different to the one you had 3 to 5 years ago. And if you go back further than that, it'll be almost unrecognizable. Again, it's part of change.
Yeah, absolutely. But I don't think it's that difficult a decision for me. I think you as a leader have to be much stricter with your teams. So recruiters, we are as a breed inherently optimistic. We want to believe we will turn every client into a great relationship. We want to believe that we'll fill the next placement from them. Hard data, sit down, get some hard data. Who are the people that it's worth us spending time on based on history? Right, who as you say, who pays on time? Where do we get fill rates? Where do we get good responses? Where are we going to make money? And
Yep.
we stop spending time on the ones that are
Correct.
just, they've got a great name, or there's a bit of brand association that we like, or there's some wish fulfillment going on. But actually we say I'm sure this is what Howard will reference this. We spend that time on doing the activities that we know actually are going to drive productivity in our business, and at the moment that's around business development. But we've got to stop spending time on unproductive clients, and we've got the data. We absolutely have the data in every business to work out which are the unproductive clients.
So I'm going to sort of pull all of that together in what I'm saying here. Stop working unproductive KPIs. Stop praising and rewarding people because they brought jobs in. Start to look at what the potential of filling that job is. And I always worked on this comment that potential is a rich man's breakfast, but it's a poor man's tea if it's never converted. And if you're sat there thinking, I've got a pipeline of £100,000, and yet you're only going to convert one of those jobs because the rest are all a waste of time, your pipeline isn't £100,000. Your pipeline is 5-6 grand, and that's it. Because it's what you.
Well, Tim Cook used to say,
because they brought all of these KPIs in. So I think you've got to have a plan. You've got to have a client plan for each client. What are you going to do? And therefore, some of those clients you might want to sack. Some of these clients you might want to do. So stop working KPIs and start to think about your data, because your data will tell you what are the most placeable jobs, what candidate footfall you have to place those jobs, and therefore what your success rate should look like. So in a tight market, what should absolutely be the measure is your fill rate. And if your fill rate is less %, you've got a massive problem. So you've got to start to drive it up. But if your fill rate is based on your pipeline, it's your pipeline that is the real problem. So let's move into the last question then. So top agency billers suddenly struggling, even your best recruiters sort of hit a wall. So what's actually happening? Why are your best recruiters suddenly struggling? And what are we going to do to retain them, to start winning again?
Well, listen, as we've got very limited time, I'll say this. I think it's an assumption to make that your top billers will always be top billers, and ignore them and just think, leave them in the corner. They can make money for me every year. I know exactly what they'll do. I can put my, I guarantee that. We're working in a changing market. You have to constantly retrain not just retain, but retrain your people, even your best billers. You have to spend time with them, challenge them in the best possible way, ensure they feel fully supported. As Heather said earlier, be consistently seeking their thoughts, their views, be consistently reinforcing the vision of the organization, where you're going, how you're going to get there, keep them bought into the company. Also, and again, I think this is more HR than anything, review what's valuable to those top billers, make sure they feel aligned with the business, make sure they feel supported both internally within the company and externally in their personal lives by your organization. But also make sure that they are aware of them, that you're in a sense getting them to breathe on the mirror, to make sure that they know what's happening. They're not just practicing the same old things they've always done. Because there comes a point when what you were doing so successfully 2 years, 5 years, 10 years ago just doesn't work any longer. And we talk about people burning out, but the reality is they've lost their way. Is it their fault, or is it the fault of the leadership that happened? It's just a question. So I think you've got to be consistently supporting your big billers to keep them at that level.
Yeah, completely agree. I was going to make a point on your last question, Howard. Tim Cook used to say we confuse the availability of opportunity with the ability to execute on that opportunity. And I think that sums up the answer to the last question really well, but it also applies to this. So big billers, we assume they're always just going to be big billers. And I think Paul's absolutely right. Big billers often over time will drop part of best practice process. And when the market shifts, that it's hard for them often to see what it is about the process they've operated so successfully, what's changed and what it needs to do. And so that ability to have the relationship with your big billers where they're not ignored, where you're constantly working with them on how they adapt to a changing market and have that as part of your culture, rather than, as you say, put them on a pedestal, they're a big biller, they'll always be a big biller. Markets change, people change, keep close to them and keep that ability to execute at the forefront of your mind.
Yes.
So I'm going to look at it in a very similar way, but slightly sort of to one side. The majority of big billers that we come across, they're big billers because they've got one or two really great clients that keep billing. Very seldom you get the client, the recruiter that's got 30, 40, 50 accounts and the biggest client's less than 10%. It's usually they've got one or two really big accounts and they're farming those accounts. So they've lost that ability to hunt and they've become a little bit complacent and they lack that drive to grow because they're used to that client just feeding them, churning them. And the owners and the leaders of the business are used to go, oh, great, rather than actually pulling up and saying, actually, you're a big biller, but you're not my primary biller because you're not opening new business, you're not opening accounts. You've become a farmer, not a hunter. In this market, yes, we need farmers to keep cultivating those clients because when they come back, they'll come back and serve us well. But we need the hunter in this marketplace to actually drive back and drive into that.
Yeah.
So I think the fact that some of our big billers suddenly lose that capability because their clients stop recruiting and they don't want to get back onto that flywheel of find new clients because they're so used to being put on a pedestal and patted, when actually we should be thinking about what we should be doing a long time ago to create consistent billers across lots of clients, not just a few.
A very good point.
And of course we pay hunter commission to people who are behaving like farmers. It's called a farmer commission. So
correct. And we do. So it's a really sort of in-depth question. I think today's been really sort of interesting. You can tell they spent 30 hours on a plane writing questions. Let's get some really good questions out. Wait till 2 weeks' time when Heather's getting her questions out about mental health. But I hope you've enjoyed today's session. I'm about to go to bed because I've stayed up, finally stayed up. I hope you sign up to our podcast. It's going to be really interesting. Recruitment Leaders Unlocked. And I can tell you now, because I've listened to all four, there's some extremely enlightening comments in there. And there's some extreme comments from every level of the recruitment business, whether you've got 1 to 5 heads, 6 to 25, 26 to 50, or 50 head pluses in your business. Every single podcast every single leader should be able to take massive amounts away and say, am I doing those type of things? And all the businesses that we've interviewed are businesses that are really succeeding at the moment and really flying at the moment. So they're going to be really extreme lightning, and I hope you enjoy them. Heather, Paul, and Dave is not here at the moment. Thank you very much for your time. And ladies and gentlemen, thanks for your time. And we'll see you all again in 2 weeks' time. Enjoy the podcast next week. Thank you very much.
Cheers, everybody. Take care, Howard. Enjoy
Bye.
Australia. Cheers.
I will indeed. Cheers, guys. Let's do that. Bye.